Hey folks, and welcome to this video symposium on the, let me see what day it is. It is the 21st of September 2022. So we're just going to run through a few pairs. And I also want to touch very briefly on these areas of supply and demand, the ones that don't hold. And as you'll notice, some of them don't hold. This one didn't hold, this one didn't hold. And the ones that don't hold, it's important to remember that they are as important as the ones that do hold, because they show us price sensitive areas based on what price has accomplished. So here we had this one here, it's kind of tested more or less, then price tore through it, price came up to it, we accumulated, and then we cut through it. Okay, so this area here removed this, and this area here removed this. Okay, and so what you would do is you would just mark this area off. This is a price sensitive area for the future. Okay, and they normally overlap quite nicely, so you can almost take these and extend them over, because you'll typically get a pattern just below this area of demand that was consumed by supply, and then again consumed by demand. And this is typically where you'll find these nice little areas. Okay, so this one didn't do anything for us, but we wouldn't have traded it anyway. Why not? Because here's the slingshot, price went up. Okay, so I mean, the reason I say that is not just because it didn't work, it's because of this. Buy side, sell side. You're not buying anything on this side, you're only buying on price structures here. Okay, so you're buying here, you're buying here, and you're buying here. Okay, you're not buying here, you're not buying here or anywhere else, or here. Okay, you're not doing that. Okay, and so no, this didn't work, but it's not on the buy side, so we wouldn't trade it anyway. Okay, so just a quick note on it. I hope that's clear. Okay, so we're just going to run through. This is the American dollar index. So let's just have a look at that. And as expected, price is really, really strong. Okay, so looking at this, so we want to find, let's just look at a couple historical price points. We had prices that price had a difficult time moving beyond. Okay, so we get our zone tool like that, from this one to this one. Price came back to the 50. Move this up to here, the swing. It's not very pretty, is it? From here, because this is the one that traded above this high here, this line, which we'll remove now because it's gone. Okay, price came down to the 50. We sat on it, we went through, went 60, 70, and then we stabbed down into the 80, which is where our beautiful area of demand found by the software is located. Perfect overlap with the 80% pullback, the 8 zone, and this area of demand. We have a high here, now this is gone. So what do? We do the same thing, go from the low to the high. Have we been back to the 50 yet? We have. What does that mean? Well, that means that, well, so far, because we have such a strong dollar, that this is a reasonable price for the dollar. Price came to it, and we've seemed to have attracted some more buyers. So wouldn't it make sense if price was able to come down to an even deeper area, like let's say this one here? Wouldn't it make sense for price to do something there? Maybe. So let's have a quick look on the smaller time frames, and you can see it pretty clearly here. And I'm just going to remove this and just draw a little. We have these areas here tested, super clear, super clear, super clear. Now it's gone. The area that removed it is this one here. Okay, so we would in fact remove this area to here, something like that. Okay, so this is what we would look to do in the future. Let's see if we, yeah, and the software found it. It put it in the deep zone because we had 1-2 periods of accumulation. But this is what you would do. Okay, right there on this candle right there. So that's a fine area to entertain along here This is right at the 6 to the 7, 6 to the 7 zone. 6 to the 7, that sounds a little bit strange. 60%, 70% retracement off the highs. Okay, so we have that. Okay, now we're going to move to some pairs. Let's have a look at, actually this is a new platform. I haven't really used this a lot. Actually, let's go here, the S&P. Wait, let's use this one here. Okay, so what do we have here? Well, we go to the, let's zoom out a little bit. We'll go to the weekly. You can see that we are racing north and we're starting to give back something. And we all know, or we all have a pretty good idea that we're probably going to see a crash in the not so distant future. As a matter of fact, people are saying that this 24th of September, something crazy is going to happen. I don't know. I don't have a crystal ball, but maybe these people who say this do. But they say on the 24th of September, something's going to happen. And there was actually a gentleman, I don't have the facts right, but something like a Goldman Sachs trader out of Germany said that something will happen on the 24th of September that will sit in our memories for our lifetimes. So that sounds kind of crazy, but we don't know for sure. But what we can see is we can see the price is starting to wriggle off. Okay, we have this. Okay, so now we've kind of touched that area several times. It could be kind of feeding off this, moving low, but we do have to challenge this. But I mean, looking at this, considering the fact that we had, okay, let's have a look at down. Tested, removed from this area here. So here, we had a very strong move. Okay, we did not quite get to it, so we keep drawing. And here, we managed to get to it. We're always going to go at least as deep as the clear retracement until this point, which was here. So at least we're going to go there. We accumulated just below that. We popped above. This is our sell zone for this area of kind of messy supply. Price went up. We poked into the 70% retracement off this low here. Which lined up beautifully with this area of supply here. So a really, really nice trade if you would have gotten that. Now we have new highs forming. So we swap this around a little bit. We go from here to here. Okay. Okay, so price went straight through the 50, 60, had a nice reaction to the 60, moved to the opposing side of liquidity. Again, remember that we have, for this move here, like so, this is the order book. We have a keen interest to buy. Come up here, it kind of goes away maybe, and then we have a keen interest to sell up here, and the liquidity thins up here. And so essentially you have, you kind of have maybe a slight overlap at equilibrium. And this is where the buyers and the sellers are happy buying and selling from each other because they're both trading at reasonable prices. It's a 50% retracement from the low and from the high, and so everyone's happy doing business at this. But when price gets higher, I mean, this is a huge increase in prices, so we want to sell. We get down here, this is a huge decrease in prices, so we want to buy. Okay, so you're going to see that, and this is essentially what market profile is. Okay, so market profile is a similar tool like this, where you have kind of a on the right side of the screen, you can kind of see where these areas are located, and this is normally based on kind of tick data, where you kind of see price kind of looks like this, kind of goes out, and then when you have these interesting highs, we have kind of high volume area here, and once you start to get to a bottom, the price starts to kind of pull out like that, you know, and then it kind of goes away down here, and it kind of looks like that. And so it's kind of pointing to areas here, price sensitive areas here, price sensitive area here, and here. Okay, that's what market profile is doing, and it's quite interesting actually. But I find that it's just best to look at price, because you're not looking or making decisions based on secondary representations of price. You're looking on price itself, which is also a lagging indicator. It's only showing you what has already done, but it's also showing you what is potentially likely to happen based on these historical facts. And when I look at this right here, see we formed this low, we had a huge price inefficiency, price rebalanced that pretty quickly. When price left, we had a visit to the 90% once, a little bit deeper twice, and then we left. So you could say, if we're considering the fact that we likely had like something in here, okay, test is removed, the origin of the move that removed that was down here. You've probably got something just around here at the buy zone. This is at the about the 90% from here to here, or this is at 100% from here to here. So I'm expecting price to have a little reaction here once it makes its way down there. But I don't think this is going to hold forever, because I think generally speaking the whole environment is kind of doing this. But who knows? We know nothing really. We are only mere mortals. Okay, going to the 4-hour chart, do the same thing. Okay, so here we had respective prices, didn't we? And now it's gone. The origin of the move that did that is here, from here to there. See, when we come back to the 50%, we came back to the 50% here. So now went 50, 60, 70, went right to the 80%. This is where we saw huge selling. If we go from here to here, this is right at the 50% just here. 50 actually poked into the 60%, and now we're much further lower. And so looking at this is the price structure we saw just a moment ago. Supply, tested, tested, tested. Okay, and so we have for here, we've got, let's just do all of this like that. We've got a buy zone really clearly marked off. The software found it here, and the robot wants to buy here pretty badly. You can see the thick box. I mean, it's saying this is the origin of the move that enabled price to trade above these highs here. Slingshot. Okay, so it's probably it wants to trade there, so maybe I'll just let it do that. Actually, no, I don't want to buy the stock market now. It's too nerve-wracking. I won't sleep at night. So we'll leave that. So that's what we have there. It's kind of interesting. Okay, and so, I mean, if we zoom out a little bit, I mean, you can see that, I mean, we have a keen interest selling from here. I think price should come up here, then we should probably start to sell off. And we have this below price as well. So price is currently operating and respecting this here, tested. We went to the sell zone on the money. We have black space here, so this is potentially no liquidity. This could be a gap in liquidity here till price gets here, which is where we'll start to see some selling yet. Likely so. All right. Okay, let's do another one. Let's do the pound American dollar. Okay, and here we have some pretty clear levels. Attempt, failure, boom, huge commitment from here. Delightful area, right? There's the breakaway spot. We have another area here, and we have the sell zone right there. So price will likely trickle up there. What do we have here? Liquidity void, beautiful, beautiful. And so price could easily come back up and rebalance those. But we can't see anything below price. Price is really low. Here looks like we moved below these lows here. See what we have. Not a lot of data there, unfortunately, but we've got that. Okay, so we're down there. We're really low. The histogram is saying it's time to have a bit of correction. It started to say that here. Now we're having kind of a divergence thing going on. See, price is going down. So potentially like this to here, or to here. And then likely a continuation lower. These are really far away from price. I don't know if we're going to get back there on this cycle, likely a weekly cycle. I'm thinking we'll probably continue lower. we'll have to see some Fed stuff coming up. Also the elections, soon. Oh my goodness, it'll be so exciting. So exciting. I would not have a single pending order open during that election because, yeah, it'll be really exciting to see. So get your popcorn. So that's what we have there. So I'm thinking we're going to go lower. Knowing that, or rather, if our thesis is that it's going to go lower, let's have a look on a smaller time frame and see if we can find some entry. So we had this one here. This is another good example of what can we use the consumer levels for. This one was tested, now it's removed. This one is formed. This is the one that removed that. Price went to it once, twice. Beautiful, beautiful examples. Okay, so this is a strong move. Just going to use the fibs here just to mark that off. Okay, we came almost back to the 50 and then we left. That was good enough. Price was in a hurry to move lower. And currently we from here, moved below this low to here. Price has not yet been back to the 50, but because it's already been to the 60 here, I'm thinking it'll probably come at least to the 60 and potentially even revisit these highs here. So back to the 100% retracement of this move, depending on some of this news that's looking to come out this week. So that's interesting as well. But try to keep things simple. When you have a big strong move like this and it brings price below historically respected areas, that means it's important, super important. So just keep that in mind. Okay, so keep your eyes on the histogram. Where are we? Are we in the buy zone, buy zone, buy zone? Every time price comes here, almost we have a retracement. So I mean, this is huge. This is hundreds of pip moves, and now we're down here again. We had a small one here, and we're down here again. And so price is likely going to rebalance. This price and efficiency. Where is it going to go? Well, my guess is we're going to go back to here. Okay, I think we're going to go back here. But I don't think we're going to stay there for long. I think we're likely going to continue lower. But who knows? Anything could happen. But shorter term, a retracement back to this area here. We've got the sell zone already established. We have black space just here. So this would be an optimal place. The 120-ish area, 120.12, would be a nice place to get back into a short position. All right, I'm going to leave it at that. If you have any questions, please do let me know, and thanks for watching.